Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. So, Tyler, I've been doing my kind of once annual portfolio checkup to kind of assess what I have, what I need more of. And one industry that I don't have a lot of exposure to that has actually performed well this year that I wish I had more exposure to is energy. So my track record in investing in energy isn't great. As you know, I bought shares of TransUnion a few years ago. I bought shares of Occidental Petroleum 2 weeks before oil went negative in the start of the COVID pandemic, and ended up cashing out because I didn't know what I was doing with it. So, what is your outlook on energy stocks before 2023? What should investors be looking at? What are some good names on your radar? Just what do you
Sure.
think?
Well, I do feel bad for leading because I know that I was the one who kind of convinced you into Transocean. So I'll take the L on that one. But one of the things that obviously 2022 was a great year, in large part because of the large run up in oil prices early related to Russia. But the kind of longer term background behind that was that the industry basically slashed its spending to the bone for the prior 7 years, and it became much more profitable at much lower levels. As you mentioned, Occidental Petroleum went from breaking even with like paying debt, paying dividends, things like that, like 70 down to $40 a barrel. So that's kind of been industry wide, and so a lot of these companies are much more profitable. Heading into 2023, I think we're still in what I'll call a constructive energy market. Prices are high enough to support people investing in their businesses rather than just like, well, we'll maintain existing and try to milk it for all the cash it has. At the same time, service costs are down, but businesses are becoming profitable again. And so there's a lot of things that look good. Now, energy has a lot of different ways. So I'll just kind of do a quick hit on like the sectors of energy that I'm thinking. So like pure exploration and production companies, kind of the independent drillers that I'm probably not going to go anywhere near them as much as they're more profitable businesses now. Their entire business, like their stock investment thesis is based on, kind of leveraged bets on oil price movements. And so without any real visual clarity into what oil prices are going to do, I don't know. I just don't want to touch them. Midstream, so infrastructure companies and refiners, they're kind of the hard to go wrong in energy at any given moment. Refiners are the only part of the industry over the past 10 years that have beat the S&P 500 on a total return basis. So you look at independent refiners, they've been good investments. And midstream, good dividend payers right now. You're not going to shoot the lights out in terms of price appreciation, but you can get dividends 6 to 9% that look well covered, and you're probably not going to blow up in your face. Just looking for companies that have good track records, good capital allocation history. Services, this is my most interesting sector for 2023. Like we were saying, offshore rigs, the Halliburton, Schlumbergers of the world, and some of the niche players in this industry. Like I was saying, the capital spending is picking up. Companies are contracting rigs, contracting service companies to do work for them. And the actual amount of available stuff in the services industry is way down from it was 6, 7 years ago. Like, for example, the offshore rig industry is about half of what it was. And so with much less competition and an uptick in spending, these companies are looking much more profitable. And I think there is an opportunity for larger returns in 2023 specifically in that sector relative to the other ones. And then, another part of energy is renewable energy, alternative energies. And one of the things for all of the things we talked about with like Inflation Reduction Act and incentivizing the spending on renewables, we are in a higher interest rate environment. And these are capital intense businesses that, take on a lot of debt to do what they're doing without a lot of free cash flow to reinvest in their businesses. And so the hurdle rates for these investments are going to get much harder, and we're probably going to see a slowdown in development and growth there. So what that means for their stock prices, I'm not sure, but I'm not going to expect a lot of renewable companies to have like incredible growth in 2023.
So I'm going to follow that up with a complete crystal ball question. What are oil prices going to do in 2023? Totally put you on the spot there.
I don't know. I really don't know.
It's a good answer.
It's something I've been awful at ever trying to predict and have stopped. My best guess is, what are we at? Like 70, 75 right now? Probably I could see down 15, up 15 in that range. And
fair enough, but no giant
surprised.
spikes, no giant crashes. That sounds about right.
Barring any weird global crisis. So, and that's the thing with the oil markets. Anything can happen at any moment to send them weird places.
So before we end, what are say 3 energy stocks that are on the top of your radar right now?
Sure. So I'll go with one midstream company because I mentioned kind of hard to go wrong. That's MPLX. That's also the ticker. A infrastructure company mostly servicing refineries with crude oil and shipping out refined product, as well as a natural gas gathering and processing industry. They have been one of the better players in this industry. They have a very conservative balance sheet. The rate at which they pay out their dividends is quite conservative and leaves lots of room to increase payments. And I think from there, it looks like an attractive investment. As far as share price, probably not much, but the dividend is above 9%. So on a total return basis, I like taking the points, I guess you could say, and that's one there. For services, I'm very intrigued by some of the smaller rig companies. So I had mentioned one earlier, but I'm going to go with Helmerich and Payne. They're an on-land driller. They have one of the best rig fleets in the industry and have been one of the better capital allocators. Low debt rates, one of the things that you're looking for for a company that's going to be profitable and return cash to shareholders today. And then my last one, I'll go with an integrated company, Total Energies, ticker TTE, one of the larger oil and gas majors out there right now, has one of the best dividends. So I would say if you're using dividend as a proxy for valuation, it looks most attractive. And its growth projections over the next several years are as attractive as most of the other integrateds. And I'm mostly comparing to like Exxon and Mobil and Chevron. So with those 3, I think it's a pretty good base when you're looking at oil and gas right now.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.